Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're always glad to have this returning guest, and it's been a while since we've had him on. Jerry Robinson is an economist and a trend trader. He's the coach for those who want to follow his lead at followthemoney.com. He's here with us again on Reluctant Preppers to talk to us about trend trading for profit. Jerry, thanks for joining us again.
Oh, it's great to be here. Thank you.
I had to smile when we talked about the topic of trend trading because the market has been confusing and bewildering to many. First of all, many of our viewers are cautious and risk averse and see the market in general as a place of heightened risk because they, like us, have been burned several times in the past when there's been major collapses in the market, that sort of thing. But most recently, we saw what was the worst December on record at the end of 2018, and then the best January on record at the beginning of 2019. So what the heck? Where is the trend? How can you find a trend in these choppy seas? And can you talk to us more about what trend trading is from your vantage point?
Sure. Well, we have seen a lot of choppiness in the markets, and you're right. December was a really crazy time in the stock market, and I think that's a really good point. Personally, I wrote a book called Bankruptcy of Our Nation. I'm of the opinion that America is completely upside down financially. It's not really an opinion; it's a fact.
Mm-hmm.
I mean, we have $22 trillion of national debt. We have sky-high debts across the board, consumer-wise, business-wise, government-wise, state governments. So, I mean, there's no doubt about it that we're in a world of hurt going forward. However, with all of that being said, what's beautiful, I think, about trend trading as opposed to just simply buy and hold investing is that you're able to take advantage of no matter what the market is doing. So the market will move in one of three directions. It moves up, down, or sideways. And a trend trader basically attempts to ride the trend, kind of like a surfer rides the waves. And you don't necessarily have to just invest in the U.S. because in this global world that we're in, this globalized, interconnected world that we have, you're able to trade anything. You could trade you could trade stocks here in the United States. You could trade bonds. You could trade ETFs. You could trade foreign stocks. You could certainly trade currencies. You can trade commodities like gold and silver and oil. You can trade cryptocurrency. So really choosing your vehicle is really up to you. So if you're risk adverse, that makes total sense. That would also mean that you would probably want to be careful about just throwing your money into the market and forgetting about it. And I think that's what buy and hold investors do. And if you take a look at the typical buy and hold investor, someone who actually put their money into the stock market back in the very beginning of January of 2000. Let's say you did. Let's say you put money into the market back at the very beginning of 2000, and then you held. You just basically held. Well, what you would have as of March of 2019, you would be sitting on approximately about 92% in gains. That's about 169% if you invested every single dividend since 2000. And so when you really kind of look at that on a annualized basis, you're talking about 3 to 4% in annualized returns. Mm-hmm. And that's a lot of risk to take for such a small amount of gain. And so the trend trader realizes that just simply throwing money blindly into the market and forgetting about it is not the way forward. So trend trading, what we do is we look for new trends. We use technical analysis. We look at the stock chart, and we're able to find whenever something enters a new uptrend, then we will hop aboard. And what we do is we actually scale into these positions. So I use what I call a pyramiding strategy, where initially whenever, let's say gold, for example, begins to form a new major uptrend. Well, what I will do is I will scale in. I'll basically say how much money would I actually want to be exposed to gold in this environment, and in this uptrend. And what I'll do is I'll scale in with a 20% purchase, like a pilot buy, if you will. And then if the trend keeps moving in my direction, then I add more. And if it keeps moving in my direction, I add more. So I pyramid into what's working, and then I use stop losses to protect me in the event that it pulls back. So trend trading, I think, although everyone is different, I think for some personalities, for some temperaments, it can really be a very powerful way to accumulate wealth. And I think the other thing to keep in mind here is that, wealth itself is generated in really three different ways. You have paper assets, you have real estate, and you have your own business. And in reality, paper assets are really probably the hardest way to actually grow wealth. The other two are much easier. Real estate and your own business, much easier to build wealth in that case. And so when we talk about paper assets, trend trading actually allows you to soup up those paper assets and actually soup up the returns that you could possibly get from them. You don't have to have a whole lot of money to get started in trend trading. You can even use options if you'd like. But if you have an interest in any particular market, maybe you have experience or education in technology, maybe you work in the tech sector, or maybe you're in the healthcare sector. I'll give you a perfect example. One of our members who is a trader, he learned to trade, and he is a pharmacist. And so he's very aware of what's happening in the pharma space. So he doesn't have to be an expert on something that's not his field. He simply focuses upon the pharma sector, or the pharma industry, if you will. And so he knows what kind of drugs are selling well. And so he's able to use his knowledge to be able to trade the markets. Some people, especially in your audience, would probably be, gold bugs. I'm just like myself. I love gold. I love gold and silver as hedges against inflation. And so I like to watch the gold market. And so because I like to watch the gold market, I like to trade gold. And so that makes a whole lot of sense for me. Others might like cryptocurrencies. And so if they like to watch that market, they can actually apply what they're learning or apply their knowledge and actually take advantage of new uptrends and downtrends.
Let me ask you a question. A couple things have come up just from what you've already shared. You mentioned that trend trading, watching technical analysis for one thing. Some people have written recently that with the apparent increase in volatility, and some even claim intervention in the markets directly by central banks and so on, that technical analysis is obsolete because just because something looks like it's rolling over and looks like it's overbought, and all of a sudden whammo, it'll get sustained again out of nowhere. We'll get these huge intraday simultaneous buys from all different fronts. So what's your opinion on technical analysis's viability in a increasingly volatile environment, and one that might include intervention by central entities?
That's really interesting. I totally agree that technical analysis has its limits. I certainly don't believe, I haven't drank the Kool-Aid, so to speak, on technical analysis. What I find over the last 100 years, if you study the greatest traders who ever lived, people like Jesse Livermore, Bernard Baruch, William Loeb, and even William J. O'Neill, and many others, what they have realized is that the only thing that you have on your side when you're investing in the stock market are two pieces of data. A, the price. What is the price of the asset? And then B, what is the volume, or what is the demand? And therefore, those two pieces of information inform the entire world of technical analysis. So every single technical analysis indicator that you can apply to a chart ultimately is derived from these two data points, price and volume. And so what I have done is I take a real simple approach. It's kind of a throwback to a yesteryear, and it's a very, very simple approach of just simply looking at price and looking at volume. And that has served me well for the last 2 decades. I've been trading since the mid 90s and really kind of cut my teeth during the dot-com boom and bust. And price and volume, I've always come back to that. It's always been what I've relied upon. And I think also in this environment where you do have a lot of intervention, I think that's also, it can actually be to your benefit, because if the Fed is always going to step in, just as it did in December and January, and start talking up the markets again, then you can kind of read that. You can kind of tell that that's what they're going to do. So I think most people who are aware are and are watching this economy and are watching this market, they know that the Fed is going to pull out all the stops to keep this thing moving higher. When the market actually does finally reach that top, whenever it finally reaches that area where it can no longer go any higher, and nobody knows where that is, but when that finally is achieved, then you're going to have a massive sell-off. And what's nice as a trend trader is that you don't just make money when the market goes up. You make money when the market goes down. You can make money in any direction. And so as the market goes down, we can cash in on that. Back in 2008, there were a lot of people who made a lot of money as the market went down. So you can actually purchase an ETF or an exchange traded fund against the NASDAQ or against the S&P 500. If you're of the belief that these things are overpriced, well, whenever it's time, when the downtrend actually begins, and you need to have some way to confirm this, you need to have some ability, some experience, some coach, some mentor that can show you how to read the charts. But reading the charts literally can change your income tax bracket once you learn how to do it. It's just a skill like anything else, that once you learn how to do it, you can apply it to really any kind of market. And when the market finally begins to break down, and it begins to accelerate to the downside, a lot of money can be made. I think of guys like Jesse Livermore back in 1929, who could read the tape, as they used to say, and we would call it reading the charts today. But he would look at the market, he would see what was happening. In 1929, he began to short the market. He saw it was too frothy. And he made, in the Great Depression, approximately $100 million, which would be the equivalent of $1 billion today, by shorting the market on the way down. And I think for those of us who are aware of how desperate our current situation is, having some sort of tool in the tool bag to be able to profit from the decline makes a lot of sense. Doesn't mean that we have to, but for some who might be inclined to that, or maybe they have, a technical mind, or maybe they like reading charts, or maybe they would like to be able to participate in something like that, then at least you can feel empowered. You don't have to watch the news and be paralyzed and say, well, I can't do anything. Well, the truth is that you can. In addition to buying hedges like gold or silver, you can also actually short the markets whenever they begin to get frothy and go down. And so I think trend trading allows, that for the average individual, whereas, other types of investing don't really give you that kind of downside protection.
You also mentioned scaling in or pyramiding in and then protecting yourself with stops. In the increasingly volatile market that we're seeing for the last year in particular, don't stops often get you trapped out, and isn't it just as pretty tricky to know where to set your stops so that you don't get stopped out and suffer a loss in the end just because you were trying to hedge?
Well, it can be. I mean, you certainly can. I think that's a skill that you have to learn. Selling and using stops is something that's extremely important. It's something that we teach all of our members here, the power of stop losses, but actually how to set them. In the end, it always comes down to I'm not an investment advisor, so I can't tell people where they should put their stops. But their stop losses can certainly be helpful. And we use typically anywhere between a 7 and a 10% stop loss on the average position trade that we put on. If it's a swing trade, we typically use somewhere between 2 and 5%. If it's a day trade, we're probably using around 1% or less on our stop losses. And yeah, occasionally you are going to get stopped out, and that's fine because as one famed investor once said, or one trader once said, is that you can actually be right only 3 out of 10 times and still make money as long as you cut your losses short. And so that's the key. So as long as you're using those stop losses and not letting your losses get out of hand, it's okay. I think if you're running into the problem where you're constantly getting stopped out over and over, you need to re-examine your system. You need to make sure, okay, well, maybe I'm getting in at the wrong time every single time. And that's another thing we teach at followthemoney.com is, how to enter a stock properly. The money is really made on the entry price. The exit price, of course, is vital, but it's all about the entry. So if you enter at a right price, at a good place, and we show you how to find those on the chart. And then, of course, setting a stop loss is absolutely vital to make sure that you don't lose, the gains that you've made. And we can even use stop losses that kind of climb right along with the price. So you can kind of set it and forget it, if you will, with the stop loss.
That leads into the next question I was going to ask you related to this is, a lot of our viewers, as we mentioned, being more risk averse, not trusting the markets, not wanting to expose themselves to significant potential for losses, maybe have very limited time or attention, and not wanting to be stressed by having to watch every jitter of the market. So what about your approach alleviates sort of that anxiety, I won't say, but just that need to be consumed by constantly watching and wondering if you're in the right place or if you should jump out?
Sure, that makes sense. When I first got started trading back in the mid 90s, I was what you would call a day trader. So 1996, 1997, I was day trading the markets, and it was very stressful. I did that on and off for several years. Then I discovered swing trading, and I thought this is much better. So a day trader, gets in and gets out of the market in the middle of the day. He usually ends the day in cash. So It's a lot of stress. You're watching the news all the time to stay on top of your trades and all of this. A swing trader, the same thing. If you're going to be a successful swing trader, you're going to be in the market anywhere from 1 day to maybe 5 days, maybe even 10 days, 20 days. I mean, it's really kind of subjective, but it's usually a short period of time. And the swing trader, he has to put a lot of effort in. He has to put a lot of time in, and he has to watch a lot about his market. He has to look at his charts. He has to watch the news. He has to know what's going on in his market, at his niche. So that's also pretty stressful for the average person who's like just working a job and trying to trade. It doesn't make sense. So the approach I actually use today, because I run followthemoney.com, we have other businesses that we run. I'm a busy guy. I have kids. I got a family. I mean, I'm busy, so I don't have time to day trade or swing trade hardly at all. So the approach I use is called position trading. And position trading, while it's not technically trend trading, you can have a form of it that is trend trading, and that's really what I do. And so position trades are really nice because I only have to put in about 1 to 5 hours of research every single week, and I spot new opportunities that are arising. So I may see, like recently we saw that China was breaking out, and we were able to hop aboard that trend. We saw that gold was breaking out not too long ago, back in December, and we were able to hop aboard that trend. And so we send out our service is really made for the weekend trader. So the guy who's working all week, he comes home, he gets his weekend Robinson report. He's able to go through it. He's able to see, what new uptrends are forming right now. And then basically we hop into those uptrends and we stay in them for a period of weeks or months, usually months. And that's a really nice way to trade because you aren't having to trade in and out of the markets all the time. When a new trend forms, we alert members about a new uptrend. We track probably 100 different markets here at Follow the Money. And every time a new market enters an uptrend, we alert our members, and we do it on the weekends. And when a new uptrend forms, we call it a baby trend. It's like a baby. It's just brand new. I mean, 30 to 40% of new uptrends fail to turn into profitable trades. So you just got to know that in advance. I mean, not every single new uptrend alert is going to morph into a massive gain, but some of them will. And so it's learning to focus on the chart, learning how to read the chart, learning how to enter the stock or the ETF. And so through position trading, we're able to kind of move into the position and just kind of check it, every few days, make sure our stop loss is where we want it to be at. And we just kind of ride that trend until it begins to bow over. And then we take our gains and we move on to the next one. And so, it's not for everybody, but for some people, it's a really powerful way to augment or, supplement your income. For others, it's a great way to boost your retirement savings. For me personally, I use a trend trading approach in my Roth IRA. I was able to get a Roth many years ago, and I was, stuff money into it for as long as I could. And so now the money that's in that Roth IRA, I can trade. And so anytime I trade within a Roth IRA, there's no tax consequences. So any gain that I make, it's all mine. And so Roth IRAs are really powerful, or you could even do it in a traditional IRA. And so trend trading within your IRA allows you to really grow that IRA. In addition, you can always take your IRA and self-directed and invest in real estate and other things. But for me, I use this approach in my Roth IRA, and I find it to be very, very powerful. So, whether you're doing it for income, real-time income, or whether you're doing it for future retirement savings, trend trading is something I think that some people may never have considered. And it's a very powerful thing that people can do to protect themselves and actually profit from what's going on around them. So many people watch news, and they're consumed with the news. In fact, they see all of these things happening, but they never really have the opportunity to take advantage of what they know. Trend trading allows you to kind of put where the rubber meets the road, so to speak. So if you know things are happening, then you can actually take action and actually profit from that knowledge.
One more thing, I know that we've talked with Gregory Mannarino on several occasions, and he talks about some of the similar principles that you're describing. And one of the things that he does, and it resonates with our viewers, is if they really have a basic distrust of the macro situation of the bankruptcy of our nation and other nations, is to, when making trading profits, then pull some of those profits out of the market and off the table and put them into hard assets like precious metals or real estate, that sort of thing, so that you're not continually growing in risk exposure at the same time that you're participating. Is that something that you
Sure.
also do?
Sure. I mean, that's a totally valid strategy, and in fact, you really don't want to, to hold all of your wealth, in paper assets. But then again, I think that's a fine strategy, but there's another strategy also that where you basically say, I'm going to take my total assets that I have, if I'm a new investor or I've been an investor for a while, how much money do I actually have to invest, investable assets, and how much of those do I want focused on paper assets? How much of those do I want focused on hard assets? Hard assets would be real estate. Hard assets would be gold. Hard assets would be silver, and other things like that. And then there's also another asset class, which would be your own business. So I think diversifying yourself. Most people today, the typical retirement plan for the average American is their home and their 401k. And in that case, you have two government-controlled assets. Real estate's great, but when it's your own home, it's really a liability. And so there's a problem there. And so I think, kind of divvying up your total investable assets, making sure that you're not over-leveraged in paper assets is key. That's probably the reason why some people are hesitant, is they think, well, paper assets, they eventually may, burn up. I mean, we may end up having a really big problem. And if that's the case, then you don't want all your wealth there. But having a portion of your wealth there and growing that wealth while you still can, makes a lot of sense.
You've mentioned on several parts of this interview talking about tools that you provide. If people want to avail themselves of those, what can they do, and what will they be able to get access to?
Sure. Yeah. Well, we have a couple of things going on. First of all, we're really excited. We have a live event that we're doing on June 1st in Northwest Arkansas called the Trend Trading Bootcamp. It's really going to be a very powerful live event where I'm going to be teaching step by step how someone says, look, I want to be able to make money from the markets this way. Maybe I want to trade commodities, or maybe I want to trade currencies, or maybe I want to trade stocks or foreign stocks. We love Chinese stocks, for example. We've been trading those for a long time. So you kind of find your niche. So we're doing a live event called the Trend Trading Bootcamp. People can find out about that by going to followthemoney.com/bootcamp, and you can learn all about that live event. But for others who say, well, that may be a little advanced for me, I just want to learn a little bit more about what Jerry's talking about, then you can go to our website, followthemoney.com/email. And there, of course, you'll type in your email. And when you do, we're going to send you 3 welcome gifts. We're going to send you a video that's about an hour long where I teach you the lessons from the world's greatest stock traders. Over the years, we've learned so many things from the world's greatest stock traders, and we put it all into a 60-minute video that I think will really, really help your listeners. Secondly, I provide my top 10 trading rules. So anyone who's interested in trading, and they've heard some things here today that they think make sense, they can download that free top 10 trading rules by simply entering their email address there. And we also provide a free PDF on the petrodollar system, preparing for the collapse of the petrodollar system. That's another really interesting PDF that they'll be able to download. So you just go to followthemoney.com/email and download all of your free welcome gifts by typing in your email address. And then in addition to all of that, on a weekly basis, we'll send you our podcast. Every time we do a new podcast, you'll receive that. We do interviews with lots of different people. You've heard our podcast before. And then also we send out what we call our Robinson Report. And that's a real valuable weekend digest that kind of gives people an idea of what's been happening in the market and what maybe they should be focused on. It's a real quick read, but it gives them some really powerful tools right at their fingertips. So followthemoney.com/email is how you could get all those gifts for free.
Thanks, Jerry. We've been speaking with Jerry Robinson, economist, trend trader, and founder of followthemoney.com. Jerry, as always, thanks for joining us here on Reluctant Preppers.
It's an honor. Thank you.
They say the stock market crashed today.
Yeah, I heard that.
Sounds like people's retirement accounts and savings accounts are going to get bailed into the banks.
Yeah.
Looks like pension plans and Social Security are going to get suspended too.
I know.
Sure, I'm glad we decided to put our money into gold and silver instead.
Me too.
Get your first ounce of silver at spot price and free shipping on any order over $99 at sdbullion.com/rp. Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.